Welcome. This is another session of the Small Business 21st Century, and you are with me, Don Moragne, your host for the Wealth Zone University. We're having a continuation of a session that we had just recently with our two wonderful guests who I'll introduce you to in a second. But we're going to be talking about capital finance, and capital infusion, and we're going to interject something that wasn't in the first two about private placement, which is an area that I have expertise in. So right now I'm going to get you and reintroduce our guest to you. Tiana, hello there, how are you?
I'm doing well, Don.
Would you refresh our audience about who you are and what you do?
Hi, my name is Tiana Wells-Lawson. I'm a Vice President for Business Banking with Fulton Bank.
Okay, fantastic. And my other buddy, hey Chris, would you introduce yourself to our audience?
Yeah, certainly. My name is Christopher Mills. I'm a Vice President at Harvard Small Business Finance. We're a nationwide commercial real estate lender focused on growing entrepreneurs all over the country.
Okay, and so now we've got three sides, because I'm going to join in here. We've got Tiana, who's a bank lender. Tiana, just give us a brief description of what bank lending does.
Okay, with bank lending, we provide access to capital for small businesses. I'm a business banker, so I'm providing access to capital for businesses that have revenues between $1 million and $5 million.
Okay, and the money that the bank lends is from depositors and from the SBA?
Yes, we also have SBA financing with Fulton Bank as well.
Okay, and Chris,
Yes.
on the Harvest side, you're a non-bank lender.
Yep.
That's actually specializing in commercial real estate.
Certainly, yeah. We're non-bank, SBA, and conventional lender.
Okay.
We have one of a few licenses to actually support the SBA program. We're approved by the SBA to offer these services to entrepreneurs and growing small businesses here in the U.S.
Now, does all the money you lend come through the SBA, or you get it from other sources?
Other sources as well, certainly.
Okay.
Our conventional program is not SBA specific. And so the good thing is that our conventional program is a 30-year program with a 70% LTV. So if a borrower has additional cash they're willing to put towards a project, we can finance the term up to 30 years, which clearly is not a typical financing structure for a bank. And then of course we support the SBA 7A and the SBA 504 program, which are nationwide programs.
Okay, and so what we want to get into this discussion is that there are two that you already know about, banking and non-banking, but there's one other one that you need to know about. It's called private placement. That's when you are offering stock or equity in your company to private individuals who are not in a bank, who are not in a non-bank situation. They're private individuals, private investors, and that's also another source of capital that you should be aware of. But the two conventional and the sources that you would go to primarily would be Tiana and Chris, and then the three of us really work together hand in hand to make sure that companies get what they need.
Certainly.
Okay? And so one of the things that I want to talk about is, what mistakes do you see that companies make when they're working with you in terms of trying to get access? Let's start with Tiana.
Well, I see a lot of companies not knowing their financials, not understanding their debt structure, just not having financial documents prepared, and then not knowing the credit. So it's very important, before you ask for a loan, you need to know that your credit score is below the standards, 500, 580. We're not going to be able to work with that. So you really need to understand your credit and your financials.
Okay, and so if I've got bad credit, before I come to you, I need to do something to get it fixed, or come to you and tell you up front that I've got bad credit.
You tell me up front that you have bad credit. Fulton Bank offers technical assistance. So we work with smaller financial institutions and non-financial institutions such as Baltimore Community Lending, and we also work with Operation Hope, and they will provide technical assistance to help you get your credit to where it needs to be. And at Fulton Bank, we like your credit score to be a 680.
Okay, all right. Chris, same situation.
Yeah.
What mistakes do you see when people come to you for assistance and guidance in getting financing from your company?
Yeah, I think sometimes clients are not willing to share all the information that we're asking for. And it's like going to your doctor's appointment and not telling him what ails you, right? But expecting that he's going to come out with a solution that's going to support, you know, your issue or your pain, right? So in my scenario, I tend to ask a lot of questions up front. We're a little more lenient on the credit score. Like sometimes a client can tell me, hey, this is what happened when, and I'll say, can you give me a letter of explanation, signed and dated, and we're just documenting the file. So if a client has a bankruptcy, I had a scenario recently with a client that I financed, and they had a bankruptcy 10 years ago. It was a really good reason, a medical debt, which we all can relate to, unfortunately. Husband and wife had to declare bankruptcy. They gave me a letter of explanation. Because it wasn't yesterday, because it was 10 years ago or 8 years ago, we felt very comfortable moving forward with the transaction. So,
But they had to explain it to you.
yeah, sometimes clients don't want to explain
Yeah,
it.
because all that stuff stays on your credit report as a literal for at least 7 years
7
or
to 10
more.
years.
And so
Yeah,
if
that's
I
right.
don't look at my credit report, you two look at it, and you see this literal down there, and
Yeah.
you know, it's like, that's what you're saying. They need to be able to understand their own situation.
You should be recognize that I am your advocate, and if I don't know what is behind the scenes, even though I've asked you, it can really affect your ability to get financing. And
yeah.
so I try to explain to clients up front that we're going to ask a lot of questions, and these things are, you know, not atypical. So you should be prepared to give me the full story, and if that's a challenge, then we need to, you know, discuss those things. So I think it's a perception sometimes versus reality. But other mistakes I've seen folks make is just, like you said, not having timely financials, or we're into almost April, but you haven't finished your year-end internals yet.
Yeah, yeah.
Right, that's 4. So we're 4 months. Typically, a client should be reconciling their books every 30 to 45 days.
Yeah.
So that's oftentimes a red flag, for example.
And that goes back to the accountant, because closing out the books and making sure that the client has accurate financials is something that is
Right.
absolutely imperative. And so if your client doesn't have accurate financials, that brings back a lot of questions. How are they actually running their company real time?
Yeah.
You know?
And can I depend on the financials?
Yeah,
The quality
absolutely.
of financials. right?
Absolutely.
How reliable are they? Right? If I ask you about your business and you can't explain the basics in 90 seconds, then I've got some concerns.
Yeah, and that's what Tiana said, that
Yeah.
you should be able to tell her
Right.
what your business does so that you can understand and the two of you can help them.
Certainly.
When it comes to private placement, we have a bit more depth because we start with the financials. We analyze those financials, and I can tell you very, very seriously that there are a lot of companies, and it doesn't really matter what size they are, doesn't matter what phase of the business cycle they are, they have financials that really don't make any sense. And so that's why making sure that they have full disclosure with you, you can help them.
Yeah.
If you're looking at financials that don't say what you need to see, you can actually help them, right?
Certainly.
And I'm sure that happens a lot in your situation, right?
It does. It really does.
Okay. And then, but you have a specific, because you're actually dealing with a commercial building or commercial real estate.
Yes.
Now, is it always commercial real estate, or is it sometimes residential property, or what?
So good question. So the core product is financing commercial real estate.
Okay.
Sometimes I'm able to be more aggressive on the loan to value. In other words, I can sometimes lend more aggressively, meaning that I can lend as much as 95% of the total project with additional collateral being a second on your home or a second on an investment property. So that's oftentimes, those are usually the exception versus the rule. Most clients, we're just looking at the real estate, the target real estate for the business.
But if I'm a business and I'm trying to buy a building, say,
Certainly.
you gave an example of renting and then buying a building. But if I'm a client and I want to buy investment real estate, can I bring that to you also, or that's not?
Today, that's not a core product for
Okay,
us.
okay.
Yeah, we may add that going forward. Small balance investment product today. That's not one we offer, unfortunately.
Okay. And Tiana,
We're still doing
Okay.
investment real estate at Fulton Bank. We have lowered our parameters, made it a little bit tighter. So right now, we're more at a 70 to 75% loan to value. Previously, we were lending 80% loan to value for investment real estate, but with investment real estate, you really just need to understand what geographic location you're in. There are several areas where the values of properties are currently depressed. So you are thinking that, oh, I bought this property 5 years ago for $1 million, so it should be worth, $1.3 million now. But unfortunately, there are some instances where the values are depressed, so it could be worth less than $1 million. So it's really important that you understand the value of your collateral, and we're going to have to get that appraised for you to make sure that we're able to offer you the loan that you want.
Okay, so that brings us to another question. What impact does the economy have on your ability to make loans, provide capital, go through your internal process? How does the economy, that, as it is now, impact your ability to do business?
No, it's very, the economy right now really drives what we do. It drives interest rates, and it really drives everything that we do in lending. So for example, the 5 C's of credit, we never really focus so much on, conditions, but now it's a huge focus to really look at all of the 5 C's of credit, because we have a lot of nonprofits who were depending on getting funded from the federal government. And so they've been told now that, we would give you a $3 million contract, or we would give you a $3 million grant, but with everything that's going on in the economy, we're going to give you a $1.5 million grant. So that could really, hinder and stifle your business and that access to capital and the access to credit that you need. So, we're trying to be proactive with contacting our clients and just to see where they are. Do they need a line of credit? Are they able to afford the line of credit that they have now? So, yeah, the economy really plays a huge role on interest rate expenses. The interest rates could be higher or lower, but if those interest rates are higher, that's really going to negatively impact the business.
Absolutely. And so we're going to take a break in a second. I'm come back and ask Chris the same question, because it's really important that we understand that the economy affects everything, including your business. WZU tells you that all the time. You've got to understand that it's a global economy, and whatever is happening out there is going to show up at your business door sooner or later. So you need to prepare and do some future thinking. Give us a second to give you some information about us, and we'll be right back to give you some more information about banking, non-banking, and private placement. Be right back, guys, okay? The objective of the Wealth Zone University is to change your mind about money, to change your financial future. Hi, I'm your host, Don Moragne. In the Wealth Zone University sessions, my guests and I talk about a wide variety of business, financial, and other worldly topics. We are seeking to both educate and entertain you. We emphasize that the information and discussions are my opinion, perspectives, and ideas, and those of our guests. We in no way intend to deliver or provide financial, tax, or business advice. You should consult with your tax, accounting, financial, insurance, and legal advisors regarding the impact, application, or pertinence of any topic or opinion that we share on the Wealth Zone University. Welcome back to the second session. In the first, we were talking about how the economy impacts the bank and the non-bank, and basically how you need to be aware of the economy in everything that you do. So I'm going to jump back right here. And Chris, on your side, the non-bank lending side, how does the economy impact what you're able to do?
Yeah, I think it affects our clients more than it affects us. In other words, our products, I think, are very attractive, especially when you're in a scenario where you're trying to make an investment decision, right? You want to put down as little cash as possible, right? Because cash is king. You want to keep that in your business. And so if I can offer you a 10% down program or even a 5% down program, that's pretty attractive. Most banks are asking for 20% down conventionally, right? But the issue for us, and I think the issue for a lot of small businesses is, do you want to make the capital investment when there's economic uncertainty, right? The rates are higher than what they were 2 years ago. I used to lend money in the 3s, and now that money's in the 7s and 9s and 10s. So it's a different decision. I think in our area here, in the greater Washington area, there's a lot of government contractors that are really having to assess the revenue stream, right? And it's an issue every day.
Absolutely.
That we're experiencing. We used to feel as if the federal government was buffered from some of the uncertainty that we're experiencing now. And so we don't want federal contractors to have fixed costs. Why? If you lose a contract, you still have to pay that debt. And so if I was advising someone in that arena,
and you are,
to make those decisions, I would ask you, what can you do to buffer from those debt obligations? Can you add other tenants to your building? Can you sublease some of your space so that maybe space you don't not utilize, and you could find another entrepreneur to come in and support you, so that should things change with regard to your contract cycle, you still have some additional cash flow coming in, et cetera, et cetera. So.
And on the real estate side, with the fluctuation in the pricing and the inflation in pricing, doesn't that make it more difficult for you to find out what the actual LTV is in your situations?
Well, not really, because everything we do is conditioned upon an appraisal and environmental. So we make a guesstimate based on the information that the client gives us, right? I've got enough tools at my disposal that I can find out the sales price and make a guesstimation on what we think the value is. But realistically, we're giving a conditional approval based on or pending the review of an appraisal. Okay. And so we outsource that to 3 professionals typically, and we ask for them to get back to us in a reasonable time frame to get a feel for what the value is.
Okay.
Yeah.
And so, Tiana, the interest rates are higher than they've ever been. Is there a range of interest rates depending upon the quality of the company and the loan? How does that work?
Yeah, so we really are looking at your interest rate based on your credit score and your business credit score.
Okay.
So, and then also the collateral that you have. If you have a very strong collateral, that could lower your interest rate as well. But right now, our interest rates are between 7.75% all the way up to 11%.
So let's talk about that for a second. If I come to you and you tell me that I can bring your interest rate down if you have X, Y, Z, your credit score is this, and how do I bring that interest rate down?
Okay, you want to,
as an example.
Well, you could also bring your interest rate down by, if I gave you if you made a larger down payment, that would bring your interest rate down. If I review your credit package, and I see here that, your FICO score is significantly lower because you have a lot of utilization on your credit cards. So you may want to pay down those credit cards, and that can increase your FICO score, which is going to drive your rate as well. So say if you have a FICO score that's at a 680, but you really don't have any delinquencies, your FICO score is at a 680 because of the utilization on your credit cards. If you get your credit card utilization down to under 20%, that's going to increase your credit score, and then we could look at if you pay down those credit cards, and that is going to bring your credit score up to say a 720, then your interest rate is going to be significantly lower.
So that's interesting. Now listen, folks, to what she said. It's the utilization rate of your credit card. It's not how much your credit is and you use it up every single month. Is that you have to have only use 20% of your available credit in order to keep your credit score up. So we know a lot of you businesses are running on your credit card, but you've got to also think about something in addition to that. It's the utilization that determines how good your credit score could possibly be when you go to the bank. And so having that knowledge when you go to see Tiana, she can actually help you and guide you by, for instance, if you pay this down.
Exactly, because I was looking at someone that I was doing a loan for recently. Their FICO score was at a 680, and they've never been late. They paid all of their bills, and I said, "Oh wow!" It's because every single credit card is maxed out.
Yeah, absolutely. Get that important. Chris, is that also a concern when they come to you?
No,
Okay.
unfortunately. I would say there's a misnomer that bankers are compensated based on your rate, and I would say most banks don't provide risk-based pricing. Sounds like Tiana's bank does, but most banks don't.
That makes sense.
Yeah, it makes sense. The reality is that we're trying to assess the overall risks and your ability to repay the debt. And so sometimes your personal credit may not be as big of a factor as a business financials. There are other times.
But isn't that because you have the building as collateral or not?
Well, the collateral is part of it, right? But the reality is that I'm still looking at the overall operating company.
Okay.
Right.
Okay.
In contrast to an investment loan, I'm looking at the lease income. I don't even know the details on the tenants, but if the net operating income supports the debt repayment, you can make a decision on an investment loan. In the case of owner-user or owner-occupied finance, I am looking exclusively at the historical financials of the business, and as I mentioned, even looking forward.
Yes.
And so I'm looking at how you manage your company, right? And then trying to get a feel for any items that I feel are red flags. And so it's more to it than just your bureau, your credit score. Those things, to me, is cherry on top. If I can look at your financials and say, I think this client can repay this loan, and oh, by the way, they also have, the principals also have good credit, that is a bonus, a benefit.
Okay.
We don't look at that first. Sometimes I don't pull credit till I'm further into the analysis to see if there's anything out there. But the client's already told me, hey, Chris, I've got good credit. I think my score is X or Y. And I don't want to pull their bureau until I know for certain that we're going to do business.
Of course.
Yeah.
But two things that both of you mentioned is, and Chris relies on it, the future stream of income. But when a company comes to you with their current financials, shouldn't they also have some kind of idea of what the source and application of funds, what they're going to use the money for, right? Is that something that you look for? If I come to you and everything else is right, but I can't tell you what I'm using the money for,
Right, that's going to be a problem on the banking side because we want to make sure that we have you in the right product. It's different if you tell me, well, Tiana, I need some money to grow my business. I'm looking to grow my business, but you're not looking to buy a piece of equipment. You just are looking to try to grow your business. That's going to be a working capital line of credit. So depending on what you say you want to use the money for will determine what type of loan we're going to put you in. If we're going to put you in a fixed loan, now typically our fixed loans is 5 years. It's going to be fixed, amortized over 20 years. That's a very popular product for us. But if you tell us that you just need a working capital line of credit, that is a line of credit that's going to fluctuate with the prime rate.
Okay.
But what we also are focused on at Fulton Bank is relationship-based pricing. So we don't want you to just have a loan with us. We want your deposit relationship as well. And then as we get to know you better, we want your investments because we are a full-service bank. So we offer deposits, loans, investments as well.
And that's what we want you to do with that cash flow, that positive cash flow that we're emphasizing that you have to have. Is making sure that your money is working for you in whatever banking relationship that you have. But you mentioned something that I think is really important, and it's that when you are looking at a company, not only are you looking at the company, the individual, but you're looking at the person behind all of that. And so when I come to you and I bring you and I've got financials and everything, you try and make sure that the person who is talking to you understands the business, is listening to you, and that you can represent them with the underwriters. Is that right?
Right. It's very important that I understand where you want to go with your business, what your goals are, and for you to be able to articulate to me exactly what your business does, because I am going to do a write-up on your behalf, and I'm going to send it to our underwriters, and so they need to understand why we should give you this loan. Are you going to have the ability to repay? Because sometimes if the client is right there on the fence of being declined or approved, it's going to be those little extras that they do and that they can provide about their business, which is going to differentiate them between their competitors. So, you know, restaurants right now, we're not really looking to lend to new startup restaurants.
Yeah, that's a hard.
That's a hard
one for accountants.
Right. So even our existing clients, we still are providing financing to our existing restaurateurs, but say they want an additional line of credit. We need to understand, okay, a burger is a burger is a burger. So if you own, you know, a burger restaurant, what is going to differentiate your burgers from everyone else's?
Branding and product. Chris, quickly.
Yes, sir.
When I come to you, do I have to have their property already identified? Or can I just tell you that I want to do it and then go out and identify it later?
Yeah, both scenarios are fine with me.
Oh, okay.
It's helpful to have that. Sometimes the client's still negotiating a letter of intent, which is typically non-binding, but at least it lets the seller know that we're interested in the property at this price and potential terms, etc. I can use that document in addition to the financials to begin your application. Sometimes the client's just coming and saying, I want to make sure I'm ready. We're going to be looking at buying a property in the first or second quarter of 25, and I was told you'd be a good contact to reach out to, etc. So either scenario, I'm still consulting them on giving them the best advice possible.
Always.
Based on either scenario.
Good.
Yes, sir.
Folks, we've had two of the brightest brains in the banking and non-banking industry that I've met, and that's why I brought them. What I want you to do is know that you need to know these two people. You need to have a relationship. And you need to have it before you need the money. We can't stress that enough. Yeah. That's number one. And number two, you have to know and own your financials. I can't say that enough. Own them. They're yours. If your accountant isn't explaining it to you, then you need to make them explain it to you or find a new accountant. This is your business. You need capital to make it run. Our friends here can provide that for you. What I want you to know is that here at the Wealth Zone University, we're going to continue to give you proven business practices that if you actuate and implement early and follow through, you're going to succeed. Talk to you later. See you at the next session. Bye.